Hey everybody, welcome back to Spent. I'm your host, Preet Banerjee, and every episode I'm joined by Derek Fung, and we dive into some of the biggest purchase panels in North America to see how people are really spending their money. Derek, welcome back to the show.
Hey Preet, it's been a while. Feels like
it has been a while, yeah, but you know what? We decided to dust off the cobwebs because of this company called GameStop, which is in every headline that is around the world. And interestingly enough, you released a report on Cardify taking a look at GameStop's fundamentals, which is seems to be the new F word on that subreddit of Wall Street Bets. Yeah. And maybe to set up this conversation, maybe you could talk a little bit about what are fundamentals of a company and how does that normally relate to the stock price of a company?
Yeah, so profit. We all hear about the word profit. That is essentially how companies normally are measured, whether they, many companies don't actually make a profit, but they're growing. So it's really a factor of cash flow, profit, future cash flow actually. And normally what investors do is they discount all those cash flows back with a discount rate to get a number to value the company today. So that's normally how companies are valued in the public markets and in the private markets.
Yeah, so essentially
cash flow.
Yeah, so essentially people are looking at things like, well, what are their sales? What are their revenues? Is it growing? Yes. And if it is a brand new company and they may not be profitable in the first couple of years, that may be okay if there's the expectation that, hey, this business model is good. There's an expectation that they're doing the right things and eventually that'll pay off. And people have different opinions as to how fast or slow these companies will grow. And that's how you kind of have a market for stocks, right? And there's the people who are buying and selling at different prices. And that seems to be completely divorced from the price of GameStop. So we thought it might be interesting to actually take a look at some of these fundamentals in case anyone wanted to take a look at these things. And that's what you guys have produced in your report with Cardify. So let's dig into the data. Yeah. So the first chart we're going to look at is weekly revenue trends, and comparing 2020 versus the year prior, 2019. So walk us through what changes happened in 2020.
Yeah, so clearly 2020 was a better year for GameStop. I think for gaming in general, as consumers stayed home, they're bored, myself included. I dusted off my old Blizzard games, Activision games, and
yeah, I remember those.
It's been forever, and started playing. So I think when you look at this chart, you'll see the green is this year, the pinkish purple is last year, and you'll see that there's certain the seasonality still persists, but you'll see that this time around in 2020, it was just much more of a bigger jump. So you'll see that when COVID was really starting, the lockdowns were starting in March, April, massive spike. People were bored. I'm sure they got to because GameStop is still a physical focused in-store experience, people, went to their local GameStop and bought games before, these stores closed shortly after. And you'll see when things start opening up again in around May, June, same thing, there's a big spike. And of course, holiday season, another big spike, Black Friday, people doing a ton of shopping, whether in store or online. And I actually believe in store was also doable because a lot of the delivery companies, there was massive delays. So I think that's what explains the big spike as well over the holidays versus last year. So this is all sales. So this is all people buying games from GameStop.
Right. Okay. And so, the takeaway I look at this is it looks like the green line, which is 2020, which is technically last year. I think you said it was this year, but we're in 2021. Thank God. It is a little bit higher. You do see those spikes when the lockdown and COVID started. But I think, what you were mentioning before really shows up more here in the average order value. And again, comparing 2020 to 2019, you see these big humps in the green lines. So walk us through that.
Yeah, I mean, it's essentially people buying more games per visit. And I think the clear explanation really is hoarding. People don't want to go back. They want to go, once to the store, pick up everything they need. And that's what explains the increase in order value. And similar to the last graph, when the lockdown started, there's a big jump. And also over the holidays, there's a big jump as well. So, but I will say that if you look at, for example, January, which is this month, you'll see that order value in 2019 was $45-$55. Big spike, like in 2020, that went up to 95. That's a maybe 2 times spike. Definitely not the what I mean, it depends when you measure the before and after, but GameStop stock price definitely much higher than the 2 times jump that we're seeing here.
Oh, way more than that, because the 2 times jump is
Way more than
100%.
that.
The stock price, I think at one point, the 1 year return was like 5,000%. And it depends on what price you use because it's fluctuating like crazy right now. But I think, maybe one of the other reasons that might explain the blip later on in 2020 was, if I'm not mistaken, there were some new consoles that were released. A bunch of big games were also released as well. And that could also contribute to those blips. Now, in terms of the frequency of purchases, there's a bit of a divergence here as well. So what happened here?
Similar. So I think consumers visited GameStop locations less. But they bought more. So April, they went less but bought more. And then over time, you'll see that the frequency generally was higher, meaning that, okay, they hoarded a bunch in April, but then as the summer progressed, they were more comfortable going back to the stores, doing more visits. And so that's what you're seeing here. But you also see that the two of them kind of meet, which means that, in this month, consumers are going just as frequently now as they may have before. And I think various things could be explaining this. It could be vaccine news that's making consumers more confident in going out to malls. It could be in warmer states, warmer provinces, although I don't think there are many warm provinces. Warmer states down south, things are more open. So I think that's why it's converged. It's very interesting. But again, it's similar year over year, 2020 versus 2019, does not explain the 5,000% increase that you're referring to. So,
right, the fundamentals don't match what's happening with the stock price. And the last thing that we'll take a look at very quickly here is the average monthly spend per customer. I mean, it's basically tracking everything that we've talked about put into one chart here. So, I think if we step away from the fundamentals, which pretty much everyone else has, who's trading this stock, GameStop, the story is, there's this activist investor, Ryan Cohen, who's joined the board, wrote this letter to everyone saying, this previous company, I came in, I turned things around, and here's my plan for GameStop. Because, the business model is it's a mall-based retailer where people buy physical copies of games. And of course, most people just download their games on their console directly. So why do you need to go into a store? So people thought, well, that doesn't make a whole lot of sense. And so there's a lot of people who are short selling the stock. And then with this news, it gave some people some hope, maybe sparked some interest, and more people started to buy and buy and buy based on this belief that this person's going to turn things around. Started this short squeeze action, which led to people covering their short positions, which basically entails buying activity, which starts this positive feedback cycle, pushing the prices up even further, causing more people to cover their shorts, and so on and so forth. And so we start to see this spiraling. There's more to it than just that. In fact, I'm going to release a separate video that talks about what's called a gamma squeeze to really get under the hood as to what's happening with GameStop. But what have you been seeing about people around you? Because I'm getting texts from people that normally don't text me saying, hey, how do I open a trading account? Which is the sign of a very speculative mania.
There's this story, I believe it's in the during the Roaring '20s, where a shoeshine boy, I think goes to John F. Kennedy, I believe, and or was it J.P. Morgan Chase? Anyway, and says, hey, have you heard about this new thing called stocks? Like, you got to buy stocks, and that's when they realized that the financial system was potentially in a bubble. My view is I don't think fundamentally the stock market is in a bubble. When you look at pockets of it, this is probably the biggest pocket. I think yesterday I've never seen so many stocks up like 100%, 200%, 300%. And I do think yesterday was a very historic event, and we'll one day look back as a historic event. But definitely, I think signs of the rise of the retail trader in 2020 between Schwab and I believe the number is somewhere close to 10 to 15%, like 10 to 15 million, which is a pretty large percentage of the U.S. population who are now new to stocks. Wow. And I think there's a lot of hype, a lot of social media that's driving a lot of this. So I definitely think there's a lot of pockets of potential euphoric activity. I mean, you look at electric vehicle with Tesla. You look at what's happening here. There's definitely pockets of the market, but I think fundamentally the Federal Reserve has pumped in something like 3 times more money this time around versus the financial crisis. Americans are getting their stimulus checks, and maybe a ton of I think I saw they call it the YOLO trade on CNBC when I was watching it yesterday. So I think a lot of that type of activity is driving this up. The fundamentals are not there. I would be very cautious if I was an investor, because what goes up, could come down. I don't know about must come down, but definitely could come down.
Right.
And I've been watching on the sidelines. It's been very interesting. We were just very curious, and hence why we pulled the data.
Yeah, who would have known the risk-off trade would be to sell GameStop to pick up Bitcoin, right? I mean, that's how wild some of these little bubbles are in the market and the speculative trading that I'm seeing. But there is a right way and a wrong way to invest. And, picking any specific fad or trend and putting a lot of money into these is very risky. So please be careful. Yeah. Do a little research on the basics of investing if you're interested in these stocks. But we'll leave it there, Derek. Thank you so much for your time. Yeah. If people want to learn a little bit more, get these reports, where do they go?
Cardify.ai. You'll find the link below. We have a ton more very interesting reports coming up, some interesting companies going public, including Robinhood. So we are going to be releasing a report on what we're seeing with Robinhood. But as you said, I think, my key takeaway is listen, there's a reason why Warren Buffett is one of the best investors in the world. It's because he only invests in companies you understand. And, hopefully today's video helps those watching better understand what's really going on behind GameStop. It is not a 5,000% increase. The markets are always forward-looking, but I would just proceed with caution based on what we're seeing. And, the Robinhood retail investor is definitely part of what's happening. And we'll be covering some very interesting insights based on our data on Robinhood over the next couple of weeks.
Excellent. We'll be looking forward to that report. And when it comes out, we'll be talking about it right here on Spent. Derek, thanks so much for your time.
Thanks, Pete. See you soon.